Hi, Assalamu alaikum students, and a very warm welcome on the second day of Practice to Pass webinar for the Advanced Taxation exam. This is your tutor Mia Saad Muhammad. I would like you all to raise your hands if you can hear me clearly and see my screen as well. Okay, thank you. Now, can can you guys please raise your hands for those who have attended the yesterday's webinar as well? Okay. Okay, so most of you have attended the yesterday's webinar as well. So for those who haven't, I'll give a quick introduction of mine and then we'll start the questions. My name is Mia Saad Muhammad. I'm a member of ACCA. I'm also a registered mentor of Oxford Brookes University. I am teaching at one of the gold approved learning partners of ACCA, the LGS Defense International Degree Program. My specialized areas are advanced audit and advanced tax. Apart from teaching, I have my own consultancy with the name of MNSK Chartered Accountants. One of my students have achieved distinction in advanced taxation exam in December 2017 exams and in 2019 exams. Now, guys, as I discussed with you yesterday that the reason or the motive of these sessions are to enable you to make you or to equip you better with the taxation knowledge and the tips and techniques that will help you to pass your exam. And I've discussed with you that as this is the first exam in the CBE format for the strategic professional exams, and many of you will have not attended any or have not given any CBE strategic professional exam before. That's why I'll be focusing on two things in this session apart from the practice. Number one, the CBE tips and techniques and the interface. Number two, the changes in the Finance Act, because the next attempt, that is the June 2020 attempt, is the first attempt of the Finance Act 20. So the questions that I have selected to discuss with you, I have carefully tried to select the question in which not only I can teach you the changes of the Finance Act, moreover, I can teach you the topics that normally the P6 or the advanced taxation students find tricky or challenging. So let me discuss with you the today's plan. Before I move on, can everybody raise their hands and give me a go ahead? Okay, guys, thank you. So let's discuss today's plans first. Today I'll try to solve 3 to 4 questions with you, and all of the questions will be dealing on multiple taxes. As you know that no question in advanced taxation gets tested on a single type of tax. So I've tried to select the questions that are not only from the latest attempt, but we also have them in the CBE format with the updated Finance Act 2020. So the questions that I have selected are Demeter from December 2018 exam, Rod from March June 2019 exam, and Enid from September 18 exams. All of these questions are also available in the Kaplan Financial Kit as well. So as you guys remember that yesterday I've told you about the practice platform, and those of you who have not were not able to attend the yesterday's lecture, for them I would like to tell you that the lectures are recorded and they're available online after 24 hours on ACCA Vimeo's channel. So if you have missed anything, you can always go back and check the recorded lectures. Now you remember that I've told you about the ACCA practice platform where you have the exam format style exams available for practice, and there you have, this time ACCA has done a star job that they have updated 4 exams with 1 specimen exam with Finance Act 2020 changes. So the question that I have selected, the first one is Demeter, and that is from December 18 exam. And what we'll do that, as I discuss the question with you, we'll start doing the revision as well from my notes that have been shared with you yesterday as well, and they're available today as well in the handout section. So before I move on to the question, if anybody has any quick question, they can post in the question section and I'll try to answer it. Crystal, there is no ATX group right now. However, I've shared the link of my page where you can ask any question if you have. Uh, Lopez, no, the answer to your question is no. Sorry, I do not teach currently outside. Okay, so let's discuss the first question that is from December 18 exam. You can navigate to the question directly if by scroll down the first you have to scroll down the page completely. Then you can select the question of your choice. So Demeter is question number 4 in this paper. As I told you that first of all we will study the requirements and then we'll discuss the questions. And we'll try to have an idea that about or on which topics the question is being tested. Explain the extent to which the report of the 20,000 lump sum inducement payment and the relocation package in relation to Demeter's move to London will give rise to taxable employment income for him. Now, if anybody of you has a good knowledge regarding the employment income rules of the income tax, they will know that what are the inducement payments. They are sometimes also known as golden handshake or hello payments. So inducement payments are normally that if someone is switching their company or switching their employer and coming to me for a job, I'll try to convince them not only with a good package but also try to offer them a handsome lump sum amount as well to start off. So what happens with that? They are normally taxable like your normal salary. So it will be added into your employment income in the year in which you receive it or in which you are entitled to, and you have to pay the tax on that as well. Now the second here is about the relocation package. Now I'll take you to my ATX notes and I'll try to tell you that where I have mentioned these topics as well in my notes. There's a separate section for employment income, and an employment income, the format of employment income is there for you guys. So in that you can see that employment income is calculated by adding all the cash earnings which you received in all forms, salaries, wages, bonuses, commissions, or golden handshake hellos, to which you also called inducements as well. And from that you can add non-cash benefits there as well and deduct the allowable deductions if there are any. So as far as the inducements are concerned, they will be added into the salary of whatever the client is. Now, as far as the relocation expenses are concerned, if you visit my notes, there's a section called exempt benefits. In under that, I have given a complete summary of all of the benefits that are exempt or that are at least up till certain extent are exempt. So here you can see that if your employer pays you relocation or removal expenses, they are exempt up till 8,000. And any amount that is above 8,000 will be taxable as a taxable benefit in kind and will be added back into your salary. However, expenses up till 8,000 are exempt. So if you know these rules by heart, and the best way to learn these by heart is not to read notes again and again and again, but the best way is to do as much questions as you can, because remembering this list or learning this list will not gonna do any good to you, because you don't know as to how to use it in the questions. That you'll only came to learn when you do questions, and the students normally ask, sir, which is the best source if we want to do or solve questions. And I recommended yesterday as well, take Kaplan kit, and try to solve the questions from there, because all of the questions are adapted or adjusted to Finance Act 2020 syllabus, but do try to solve them on computer. So the thing that I wanted to tell you is that these small rules that we normally think that may get tested in taxation exam and will not be tested in advanced taxation exam, this is not right. So please do remember these tiny details. However, we have to read the scenario, and do remember that yesterday I told you that advanced taxation exam is a planning paper. So as far as the style of the answering the question is concerned, what you have to do is that you have to assume that the client is sitting in front of you. He's a layman. He does not know about about tax, anything about tax. So what you have to do is you have to tell him in such a way with the help of numbers that he'll be able to understand what you're trying to say. And your answer should answer his query as well. So we'll try to answer the question in that way. Now, let's get back to the question. If you have a good idea of the rules, you can have a at least 30-40% of the idea what you're going to write in the answer, and what is expected in the question from you as well. Then the second requirement deals with identify and calculate with brief calculations. Now here I have to do or perform some calculations as well. The reliefs available to Demeter to reduce the chargeable gain of 94,000 on the sale of his house in Manchester on 31st October 2021. Whenever there's a CGT and we talk about relief for the house, there are only two reliefs that comes into my mind. The one is PPR relief, principal private residence relief, and the second is letting relief. We'll discuss that in a moment. So that part must be dealing with that reliefs. Explain with supporting calculation. I have to perform calculation in this part as well. So I can highlight this text as well by clicking on the highlight button. The tax consequences for Demeter participating in number one, Poisdon Limited approved occupational pension scheme. Okay, now I will take you to my notes and tell you that where you can find the pension as a topic and learn. However, there's another source to learn pension, that is the taxation version of technical article for Finance Act 2020, not the advanced taxation. The taxation paper article, the F6 version, is a very good article to learn these rules, because there are several examples underneath the pension heading from where you can learn. So yesterday, I've also told you that this section exists in the notes. There are two types of pensions, personal and occupational. The occupational pension amounts are always paid gross. If you pay the occupational pension amount, they will be deducted from your salary as an allowable deduction. If your employer does pay it, it is an exempt benefit. So later on, we'll see that in question what the requirement is asking. Poisdon Limited's non-taxed advantaged unapproved share option scheme. Now, share option scheme is a very popular topic in taxation exam, advanced taxation exam, because it is solely a topic of advanced taxation. You do not study these topics in taxation exam. These topics are a bit tricky, and you should have a good idea of them as to how the share option scheme works and what are their tax implications. In respect of the grant of the option on 31st December and the exercise of the options and subsequent sale of the shares on 6th April 2027. Now I have an idea that one part relates to the inducement payments, another deals with the release of house, and in third part, I have to talk about two things, pension and the sale of shares. So these are the four things that I should expect in the scenario. Now I will click on the scenario, and before reading scenario, do you guys have any questions till now? Okay, Akil, you have asked that what is the best way of managing time in the exams. The best way of managing the time in the exams is to practice the questions at home in exam condition. What do I mean by exam condition? Pick up your mobile phone, put a timer on it, and start solving the question. Do not look at your mobile phone during solving the question. Once you are done with the question, look at the timer and identify that how much time are you taking. Second thing, in exam, do not try to emphasize over on quality. If you try to emphasize over on quality, I always say that look, if there is a question which is worth of 15 marks and you answer it wonderfully, but you spend double the amount of time for that, I cannot give you 20 marks out of 15. The max marks I can give you is 15 out of 15. However, if you would have spent the actual amount of time that was required for that, and the remaining time you would have spent on some other question, and your quality was okay, you might have scored 10 marks from this question and 10 marks from some other part. So you would have scored 20 marks in total by producing, okay quality answer, not that much quality of an answer. So do not focus that much on quality in the exam. That is what makes your time management wrong. Try to solve as much as possible the paper. Your first objective is to fully solve the paper, 100% attempt the paper. However, if you're not able to attempt the paper 100%, at least 95% paper should be attempted, or over 90%. And do not focus that much on quality. The taxation paper is pretty straightforward. It does not require you to write that much. Okay guys, so let's start the question. And during the question, I'll tell you the tips to read the question as well, because you guys sometimes neglect the importance of the reading the question. However, you don't know that if you have a good reading skills, you'll automatically be able to figure out the correct figures or correct information from the question. Demeter is a UK resident and domiciled, commenced employment with Poisden on 1st December 2021. Will have no source of income other than Poisden Limited in all relevant future tax year. Okay, so he has just started with Poisden Limited, will be a higher rate taxpayer in all future relevant tax years. That's fine. So whenever I have to calculate do any calculations for him, I'll be taking the CGT rate of 20% and income tax rate of 40%. Has relocated to London from Manchester, a city more than 150 miles north of the London. So this must be relevant to requirement A. Now do remember that the ben relocation benefit that I have told you, that is exempt up till 8,000, is only exempt if you have to relocate because the current employment is unreasonably away from your current home. For example, if you have to move a city, or at least it is more than a reasonable distance away from your current residence. In that case, if you do relocate, then the benefit is available. So we can clearly see here that he has to change the city for the new employment. So that can be regarded as reasonable. Now, Demeter will receive an annual salary of 220,000. By receiving this much high salary, he may not be able to entitled to personal allowance as well. On 31st December 2021, P Limited made a one-off lump sum payment of 20,000 to Demeter as an incumbent to take up employment with the company. So now you can clearly see that this is relevant to part A. The students were asking about my notes. Guys, it is available in the handout section of the webinar. You can download from there. Coming back to the question, P Limited paid Demeter 5,000 towards his cost of relocating to London. The company is also paying him 1,500 each month for 4 months, from 1st December towards renting accommodation in London until he purchases a new house in April 2022, which means the company has paid him 5,000 lump sum, and regarding to relocation expenses, and then 1500 times 4, that is 6000 as the rent till he bought the new house. So the rent will be regarded as a qualifying expenditure for relocation as well. Okay, because he was living there due to the relocation and the employer has supported him. So that will be a qualifying expenditure as well. So in total, 1500 times 4 equals to 6000 plus 5000 equals to 11,000. So 11,000 has been given to Demeter with regard to relocation expenses. I can stop here and I can open my scratch pad and I can write few notes for myself. One is that 20,000 will 20,000 add to salary and relocation 8k exempt out of 11. That are my notes till now. So when I have to produce the answer, I can come back and see my scratch pad that what was my assessment during the reading of question. On 1st December, Demeter was granted a share option that I think relate to part C, I guess, in which they have asked me about the unapproved share option scheme. From 6 April 2022, Demeter will participate in P Limited's approved pension scheme. That was also a requirement that I have to tell him about the consequences of tax when he had to participate in the approved pension scheme. Now, relocation to London. You can clearly see that the headings are telling you that which material deals to which requirement. Relocation to London deals with the first part. Then you have the house of in Manchester requirement, which we have seen that he has sold a house and we have to tell him about any reliefs are available. That is the second requirement. Then the next heading is pension contribution. So you should know that the answer related to pension should be here, and poised share option scheme. The last part answer should be here. So guys, in tax, the question is so well described that it is very easy for you to just read a small part of the question and answer the specific requirement. But I will always suggest before writing an answer to any particular requirement, you can write your notes on the scratch pad, but do not write an answer completely to a requirement, because there are some times when their requirements are correlated. There is something in the bottom part of the question that might be relevant to the earlier requirements. So you can write your notes, but do not write an answer completely. Okay, moving on. Let's discuss the first part, relocation to London. D incurred costs in relation to his relocation to London of 6,000. This amount includes estate agent fees of 2,800 in connection with the sale of his house in Manchester on 31st October. So this is the 6,000 that his company paid him. On top of that, his company paid him 5,000 as well. Separately, 6,000 as well. Separately, 1,500 into 4. Demeter signed a 4-month lease for a flat in London from 1st December at a monthly rent of 1,700. Now, these are the costs that we have seen here, 5,000 and 1,500, that are paid by the company to Demeter, and these are the expenses that Demeter on top of that incurred. For example, if the company has paid him 5,000, his actual expense was rather 6,000, so he has to bear 1,000 from his pocket. Then the company paid him 1,500 monthly rental, but the flat that he has selected himself to live in was 1,700. Now, what do we have to do for the cost that is above that? We will not be doing anything, because all we have to do is we have to calculate the taxable benefit, and the cost that he has borne from his pocket does not constitute anything. The only part of the benefit is that the amount of money his employer has given to him. So we'll only be focusing on the money that the company has given to him rather than his expenses. So if there is no information available in the later part of the question relating to the relocation, My answer is final for 5 marks. What I'll be writing is my first point will be about the lump sum payment of 25,000, 20,000. I'll be writing that one of lump sum inducement payment of 20,000 paid to Demeter will be fully taxable and will be added into his salary. Second, I'll talk about the relocation expenses. I'll tell that total amount of relocation expenses received to Demeter by the company are 11,000. That is 5,000 one-off payment and 1,500 into 4. Out of that, as per HMRC rules, 8,000 is exempt and the remaining amount will be taxable and will be added back into the salary of Demeter as a taxable benefit. Now guys, if assume that Demeter is sitting in front of me, do you guys agree that he'll be able to understand what I'm trying to say, though he's not a tax man? But I've tried to explain the answer to his query. So raise your hand if you agree that if he would have been sitting in front of me, he would have understood what I'm trying to say. Come on guys, I'll be needing more participation from you. Thank you. So guys, this is the way that when you have to select your language to communicate with the client, it does not have to be a very lavish English. It can be a plain English. Another question that students do ask me, sir, what about the spelling or the grammatical mistakes? Because for most of us, English is not our first language. It does not matter when it comes to taxation exam. As long as you're able to communicate your point in whatever English, you'll not be getting any marks for English, and there will be no marks deducted for the English. But all you have to make sure is that the material within your communication or the content should be that strong that it communicates or answers all part of the requirement. In relocation, I have two problems. One was the lump sum payment and one was the relocation expenses. So I have tried to explain Demeter about the both. Now, let's move on to requirement B. House in Manchester. Demeter purchased the house on 1st February 2009 and lived it in as his main residence. So obviously I'm thinking towards principal private residence relief PPR. Demeter let the top floor of the house, comprising 30% of the total house, to tenants from 1st February 2011 to 31st October 2021. The tenants did not share Demeter's living accommodation or take meals with him. Okay, so it is not a sharing accommodation. They live separate. Demeter lives separately. Demeter continued to occupy the remainder of the house as his main residence until October 2021, when the entire house was sold. So the house was sold in October 2021. However, the house was partly let out during the duration of his ownership of the house. The sale of house gave rise to gain of 94,000 before any reliefs. It means that he has given me the gain himself. I do not have to compute the gain myself. All I have to do is to think about the reliefs. Demeter did not own any other house throughout the period from 1st February 2009 to 31st October 2021. If you look at the Kaplan kit, the question is a little bit modified. There the dates are 1st May 2008, from which the Demeter has bought the house. Here the dates are 1st February 2009. So that doesn't matter. All matters is that do you have the concept. So let me take you to my notes and tell you that where the PPR relief is. The second chapter is capital gains tax, and that you can see a PPR relief. Now, there are few changes in PPR relief. I would like to you to raise your hands who know about the changes in PPR relief in the Finance Act 2020. Only those people will raise the hands who know about the changes. Okay, and there were not that many. Only 3-4 students have raised the hand. Okay, guys. The first change is that, and there is a change in letting period as well, letting relief as well. I'll tell you what that is later on, and what letting relief is. PPR is a relief that is available to to an individual if he sells his main residence in which he normally lives. And you first have to compute the gain, and out of that gain, you have to time apportion it by the amount of months that the individual has actually lived in the house. If the individual has lived forever in the house, all of the gain will be exempt. However, if he was away for a certain period of time, there are certain exemptions that can be available. And if even after exemption, there is some part that will be chargeable, that will be subject to capital gains tax. Now, here you have seen that since Demeter bought the accommodation, until the period that he has sold, he has lived in the house. However, he didn't left the house, but part of the house was let out. So the part of the house, or the part of the gain that was apportioned to letting, will not be covered by the PPR exemption. However, there is a separate relief called letting relief for that, which we'll discuss in a bit. The change that has been made into the Finance Act 2020 in PPR relief is that one of the exemption was that if you are away from your house, last 18 months will be considered as you were living in the house, that they will be considered your ownership. However, that period has been reduced by, hold on guys. Sorry for the interruption, guys. I was just checking that whether my screen, you can view my screen. Can you guys quickly raise your hands and tell me that you can view my screen and it is active? Thank you. Okay, so I was talking about that the reduction of the, or the exemption that was available previously of 18 months have been reduced to 9 months by HMRC. So this has been reduced. Let's talk about letting relief now. Letting relief is available on the gain that is not covered by PPR. So there is a chance that you still be able to get away with the capital gains tax by claiming letting relief on the gain that is not covered by PPR exemption, because you were either not living in the house or you have let out by living in the house. Previously, what used to happen is that even if you are away, for example, I'm working in one city, let's say I'm working in Manchester, but I've got a job offer from London. So what I'll do is I'll switch my residence to London by renting a house there, or I can buy another house there, and I let out my main residence. And let's say there's a 2-year, 3-year contract, then I came back to Manchester, then I lived there for a certain period of time, and then I sell the property. So the period in which I was away, although it will not be covered by PPR exemption, but it was used to be covered by letting relief because I was away, but my house was let out. Now the HMRC has made the strict rules. HMRC says that if you are away and you have let out the house in your absence, that part will not be qualified as a letting period. The qualification of the letting period now depends upon that whether you were living in the house as well along with the tenants. So now the tenancy will only be considered if along with the tenants you are living in the house as well. So guys, tell me in the questions section that what do you think? Does in Demeter's case letting exemption applies, or the letting relief does not apply? I told you about the change in the Finance Act. Quickly, I'll need more answers. Thank you, Tariq. More answers, please. Yes, Tariq, you're right. It applies. Why? Because Demeter was living with the tenants. 30% of the floor, that is the upper floor, was given to tenants, and Demeter was using the rest of the house. So Demeter does not left the house completely and let it out. However, he was sharing the house. Yes, you're right. He's living as well. So as per the new letting relief rules, the letting relief will be applicable. Now, do remember that whenever there's a changes in the Finance Act, examiner loves to change to test them so that he can know that, because many of the students are repeating the exam, so he always wants to know that do they have the updated knowledge of the paper. So do remember that these rules can be tested and you should be well aware of these rules. So let's get back to the question. What I should do is that I should be careful in calculating the duration for which Demeter has owned the house, because the duration will help me not only in calculating the PPR gain but the letting relief as well. So from 1st February 2011 till 31st October 2021, I would like you guys to answer me in the question section that how many months will they be, and then I'll teach you a tip to calculate the duration. From 1st February 2009 till 31st October 2021. No, guys, look at the years. February 11 from 31st October 2021. I want you to tell me the exact months. Tariq says it is 10 years and 9 months. Tariq, I agree with your answer partially. Why? Because the easiest way to calculate the months are that you first have to calculate the absolute years. For example, from February 11, if I want to calculate when will be the exact 10 years complete. So how can I calculate from February 11 to February 2021? These will be exact 10 months. However, the month of February will not be considered in the calculation because I've started from 1st February. So I should end up at 31st January in 2021. So from 1st February 2011 till 31st January 2021, it will be 10 years. And now you can count the remaining months from February till October, February, March, April, May, June, July, August, September, October, 9 months. And to calculate the months straight away, you can multiply 10 into 12. So 10 multiplied by 12 equals to 120 months for 10 years. Plus 9 equals to 129. So the house was in the ownership of Demeter for the total duration of 129 months. Okay. Demeter purchased the house on 1st February 2009. So we can add 2 more years in that, because this is the period from which the Demeter has given the house to the tenants. So Tariq, if I add 24 in that, how much total months will it be? 153. Thank you. So the total months will be 153, out of which 129 months the house was shared with the tenants and Demeter was living there as well. Now, when I'll be calculating the PPR, I have to divide this duration, this total duration, into 3 parts. First part was in which the Demeter was only using the house. First part is in which the debtor was using the house. So what is the duration of that? That is from 1st Feb 09 till 1st Feb 2011. So that are 24 months. In these periods, he was occupying the property himself, so this will qualify completely for the PPR exemption. However, from 1st Feb 11 till 31st October 21, as we have just calculated, they are 129 months. But the problem is, this 129, in these 129 months, the property was shared with the tenants. So the whole of the months cannot qualify for the PPR exemption. We have to split these months in 30 and 70%. But before I do that, as I told you that the last 9 months are unconditional, they will be available to you to claim the exemption, whatever the circumstances are. So what we shall do is, we shall separate the last 9 months. That is, I can change the dates here and I can make it 120 months. So it will become 31st Jan 21. And last month will be 1st Feb 21 till 31st October 21. Last 9 months. These months will be available in full. However, these months will not be available in full. For these months, only 70% of the part will qualify for PPR exemption. So you have to multiply 120 times 70% days, how 70% months. How much will the 70% will be of 120? Tell me in the question section. I'll calculate with you as well. So 0 0.7 multiply by 120, 84. Thank you, Tariq. Guys, apart from Tariq, I would like all of you to participate with me as well in the question section by telling me the answer, or if you have any question. So that is 84. Now, the total months that I can use for PPR exemption is 24 plus 84 plus 9. So let's add all of these months. I have 84 here. Let's add 24 and let's add 9 in that. 117 months qualify for PPR are 105, I guess. 117. 117. And total months, what is the total period of ownership? Total months are 24 plus 120 plus 9, or I can add 24 plus 129 to calculate the total months, 153. Thank you, Tariq. So the total months are 153. Out of that, 117 qualify for PPR. Let's check notes and see what is the formula to calculate PPR exemption. To calculate PPR exemption, you should use the gain, then multiply it by, on the numerator you take period of occupancy in which the person has owned the ownership, owned the residency, and then divide by total period of ownership of the house. So what we'll do is, our formula will be for PPR exemption, gain. Let's see what is the gain from the question. So the gain is 94,000 before any reliefs from the question. I'll get back to my scratch pad. 94,000 times 117 in the numerator and divided by 153 in the denominator, and that will tell you what will be the PPR exemption. I will solve it with you. 94,000 times 117 divided by 153. 71882 is the PPR exemption. 71882 is the PPR exemption. Now, the total gain is 94,000. So if I deduct the total gain out of that, 94,000, what will be the chargeable gain? 2217. So gain equals to 94,000 PPR equals to 71882, that I'll deduct from it. So chargeable gain is the one that is left, that is 22117. Rather, I'll take it 22118 because it is 0.6, so I will round it up. That is the gain that is left. Guys, as we have discussed just few minutes back, what will be the gain that is available for this 22118? Is there any relief available for this 22118, or will this be chargeable to the CGT? Is there any relief available for this 22118? Thank you, Tariq. You've been a star. It is a letting relief. Thank you, Rubina. Thanks for your participation. I would like other students to participate as well. Thanks, Akil. Yes, it is letting relief. Because Demeter was living in the house along with the tenants, he never left the house completely with tenants. So that is why the letting relief is available. Now, let's get back to the notes and see how letting relief is calculated. As far as the letting relief is concerned, guys, it is lower of 40,000, that is a fixed amount, PPR exemption, which we have calculated. And it means that to compute letting relief, you first always have to compute PPR exemption. So I have computed it already, and then gain on letting period. How do you calculate gain on letting period? Any gain that is not chargeable in PPR, or any gain that is not exempt, sorry, in PPR due to the letting of the house is gain on letting period. And you can clearly see that in our example, the gain that was not got exempted due to letting in PPR was the gain that is left, 22118. So the remaining gain is the gain that will qualify for letting relief. Now you guys tell me, what is the lower amount? The 40,000, the 22118, or the PPR exemption of 71882? Out of these three, thank you, Tariq. Remaining gain of, yes. Thank you, Bala. 22118 is the lowest out of these three. That's why all of this relief will also be relieved by the letting relief. Now, let me tell you how you will be writing these. Once, what I'll suggest is that what you should do is, let's say Demeter is sitting in front of me and is my client and he's asking me about these things. I'll start with Demeter that there is a relief called PPR exemption that is available to you if one sells his main residence. So that is available to you. And I'll tell him, let's say, imagine if the, Demeter is sitting in front of me and he's not a tax guy. He does not have any knowledge. He would have asked me immediately, Saad, what is the PPR? And I would have told him, Demeter, PPR is the relief that is available if you sell your main residence, and if you have lived in your main residence throughout the period of your ownership, all of your gain is exempt. Then he would have asked me, but Saad, I've been living into my house completely, but if part of my house is let out, does that make any difference? And I would have answered him, yes, it does. That part will not be qualified for PPR exemption. Then he would have asked me, Saad, is there anything else that we can do about that gain? And I would have told him, Demeter, yes, there is a relief called letting relief that covers the amount of gain that is chargeable and that is left because of the PPR exemption rules. So that is how you should imagine that the client is sitting in front of me, but the problem is that I cannot communicate with him with my, you know, words. I cannot speak. The only way of communication is paper. So he's sitting in front of you, but you're unable to communicate with your mouth. You have to communicate through paper. So then start writing in such a way, but your answer should be precise. For example, Tariq, the students that complain to me that, sir, we are unable to manage our time, they are into like they just want to make Demeter an expert of ATX. You don't have to make Demeter an expert of ATX. You don't have to write that much. All you have to do is tell Demeter what he wants to know. And all he wants to know is that how much tax he has to pay on the house. Is there any way that he can save it? That's it. These are the 2 points in which Demeter is concerned. Your answer, your written answer should be precise and should be to the point, to these points. Okay. And what you can do is that in between you can insert a table. I can tell you how you can insert a table. I've told students yesterday as well. In word processor, this is the table option. And as you know that in one column you have to write the dates. In second column you have to write about the that is it qualify for the PPR or not, and in third column you have to write about the months. So I can select 3 column, and 3 by 5 I can select. Here I can select write the reason whether it qualifies for PPR. Then how reason can be in the second column, rather the first column can be dates. So I can cut it from there. You can select it, cut it from there, come here and paste it from there. If it does not allow you, you can write manually as well. So dates can be here, reason can be in this column, and in this column it will be months. So only by making this column you can do the PPR calculations here. For letting relief in this question, there are no calculations. The gain that is left after the PPR exemption is subject to letting relief. So you can mention that is as well in your paragraphs. Try to explain every new point to Demeter in a new paragraph. You'll not be using bullet points for these. You should use paragraphs, and for each new point you should use new paragraph. Your paragraph should be precise. There are not 20 marks available for this requirement. Okay, so you should avoid spending that much time. However, do remember that what happens is, guys, that in a question I never ask you to time apportion every requirement as well. Why? You should only time apportion the question. For example, for a 20-mark question, if you multiply it by 1.8, you're around 37-38 minutes. Your target is to solve the complete question within that time. You should not further calculate the exact time that you should spend on each requirement. Why I emphasize on that? What happens normally is that there are certain parts in which there are calculation which normally take more than required time. But in the later parts, there may be some parts of the question which do not have any computations involved. And if you have the concept, you can write the answer earlier than the required time. So they can then, settle off against each other, because in one part of the question you spend more time but in the other you have spent the lesser time, so they will compensate each other. So I will suggest you to only specify time for a complete question, not for requirements, because there are some requirements that may take more time than the required. However, there will be some requirements that you can solve earlier than the required time. So let's get back and read about the pension contributions. Demeter has made allowable contributions of 40,000 to personal pension for the last 5 tax years and will continue to do in the future tax years. For the tax year 2023, Poisden Limited will contribute an amount equal to 10% of Demeter's annual salary to his approved occupational pension scheme. Now, I've told you that if your employer contributes in your occupational pension scheme, it is an exempt benefit. There is no tax on that. If you contribute into your occupational pension scheme, it will be deducted from your salary. Demeter will make no contributions, so therefore there will be no amount that will be deducted. Now, guys, can anybody tell me that there's a thing called annual allowance in pension, which is normally considered to be the maximum amount of pension that one can contribute? But can you tell me that is it allowed for you to carry forward if you have not utilized your complete annual allowance? Answer in yes or no. Akhil, you're wrong. We are allowed to carry forward, but that is only allowed for the last 3 years. Okay, so if you have not used your annual allowance completely, you can carry forward it for the 3 years. After 3 years, it will not be allowed. Yes, Tariq, you're right. And the utilization, if you want to utilize it later on, it will be on FIFO basis. I will take you to my notes. There is a separate section there for pensions in which you can find all of the details relevant to pension. It is an income tax, obviously, because it is a topic of income tax, that is pension. There you can see annual allowance, it is 40,000 and you can carry forward. But if you want to utilize later on, it will be utilized on FIFO basis. That is, the oldest one will be utilized first. Now, what is happening here is that this allowance, guys, one more thing I want to ask from you. This allowance, the 40,000, is it for only personal pension contributions or occupational contributions? So you should write P for personal, and for both you should write B in the answer. Tell me, is this limit for both or for the personal pension contributions? Robina, you're wrong. It is for both. So what is happening here is that Demeter was utilizing his full amount himself. On top of that, now his company has started to contribute on his behalf in his pension. So now 50,000 is being contributed into his pension, 40 by himself, 10 by his company. So he is now exceeding the limit of 40, and the problem is he has no unused annual allowance left because he's been using himself fully for the last few years. So Tariq, if I may ask you that what happens if one contributes above their annual allowance? You can write nothing or you can say that tax, which means that tax is payable. Okay. Guys, can anybody else tell me that if the tax is payable, what type of tax is payable? What type of tax is payable? Income tax, capital gains tax, which tax? Income tax. Thank you, Rubina. You're right. If you contribute above the 40,000, you can contribute, you're allowed to contribute, but HMRC will charge you tax on the above amount. How much tax? It depends upon which band rate payer are you. If you are a high rate band payer, you have to pay on 40%. If you are a basic rate band payer, then 20%. It was clearly mentioned in the question when I was reading the question that Demeter is a high rate band taxpayer. And obviously I can assess that he has a salary of 200,000. So he'll have to pay the tax. Now, Demeter has asked me that what will happen to the contributions. Now imagine that Demeter is sitting in front of me, and obviously because he's not a tax guy, he'll have no idea what the annual allowance is, what the 40,000 limit is. I mean, whether he has, there'll be any tax or not. Okay, and whether the annual exemption, occupational pension is exempt or not. So I have to tell him all these details when I'll be discussing with him the pension thing. I will start with him that the contribution by the company is an exempt benefit. So it will not give rise to any tax. However, because you are already using your annual allowance, and annual allowance is the maximum limit that one can contribute in a year without incurring tax charge. So you have crossed that limit by this 10,000, because this 10,000 40,000 limit is made up of all of the contributions, either from personal or occupational. So in this way, he'll be able to understand that this 40,000 limit is not for the personal pension contribution. So you should tell him that this limit is for all types of contributions. Either you contribute, your employer contribute, and whether it is for personal or occupational, for all types, the limit is 40%, 40,000 for a year. However, if you would have any amount left of your annual allowance, you would have used it this year. But as you were using yourself fully in the last few years, you are unable to use any further amount. So guys, these are the things that you have to tell him. First of all, that the occupational pension is exempt. Second, that the above contribution from the 40,000, that are 10,000, will be taxable. Second, and thirdly, you'll be telling him that the contributions that you are making above your 40,000 limit will subject to the tax, and you can multiply 40% above the amount of 40,000 and tell him that this is the amount of tax you have to pay even if your employer makes contribution, because it is exempt from the benefits perspective, but you have to pay the tax. So the answer can be precise. These three things can be explained in three different paragraphs, and that's it. Do remember, even if you are following a calculation that you have made yourself in some earlier part, and you later find out that these calculations were wrong, and you were carrying those calculations in the other parts of the question, you will not lose marks. You will only lose marks in the part in which you have done the calculation wrong. In the next part, you'll score full marks if you tell the criteria. Do remember, it is not a computational exam, it is a tax planning exam. You have to take help of computations to explain your planning to your client, to your manager. So computations will be used as part of your explanation. There will be no computational based part. There may be, but the complete question cannot be sent on computations altogether. There can be a specific part. And in tax, do remember, if the client has given you that I have this option and this option, always advise him that which option results in better after tax income or proceeds. So at this part, we are done. Let's talk about other part. I'll again share the question with you. Poised share option scheme. Now I'll take you to my notes where I have written about the share option scheme. There are two types of share option schemes: approved share option schemes and unapproved share option schemes. What do I mean by share option? What happens is that in larger companies, the executives are offered an option by the company that they may buy the company share at a later date at a discounted price. Now, why do the company do that? Because if the employee knows that he's also in up to some extent the owner of the company as well, he's the shareholder as well, he'll try to work really hard in the company and try to do certain things which makes the revenue of the company more and will increase the share value of the company. So because he'll be benefiting himself as well along with other shareholders. So to align the interest of executives with the shareholders, companies sometimes offer share options to executives. Share option means that you can buy a share at a discounted price later on. Do remember that there are two types of schemes: an unapproved schemes and an approved schemes. Unapproved schemes means they are not approved by HMRC. Company can set up their own scheme as per their own discretion. Approved schemes are mentioned by HMRC. They have a specific criteria. You cannot go out of that criteria. You must have to follow that. So here it is already told to me that the scheme was unapproved. However, I've seen some question in which you first have to identify whether the scheme is approved or not. So you should have a good idea of share option schemes. There are three instances in share option. First is the grant date. The grant date is the date on which the company has made a promise with the executive that you can buy a shares at a future date. For example, I have promised to my employees that I'm providing you an offer or giving you an offer that you can buy shares after 3 years. So it is a grant date that I've given them the option. When the 3-year period elapses, they can buy the shares at the predetermined price that I have decided with them. That date is called exercise date. And then later on, they can dispose of the shares to realize the cash benefit if they want to, or if they want to keep the shares, they can keep it. But when they'll be disposing the shares, it will be in the domain of capital gains tax. It will go out of the domain of the income tax. Only the grant date and the exercise date are the instances with which income tax deals. When he has exercised the shares and whenever he disposes of the shares, that part belongs to the capital gains tax. Now, what is the difference between approved and unapproved scheme as far as the taxation is concerned? Criteria you can revise later from my notes. Guys, if your company has given you an approved scheme, there will be no tax implications on grant date. But there are no tax implications in an unapproved scheme as well. So as far as the grant date instance is concerned, both are the same. You'll not be having any tax. However, as far as the exercise date is concerned, when the exercise date will come, if your scheme is unapproved, you have to pay income tax and NIC between the difference of the market value at the date of exercise less the price you have paid. For example, if on that date in which I have to exercise my shares, I can finally buy the shares, the actual market value is £5 per share, but the company has offered me to buy at £4 per share. So my benefit is £1 per share. I'll multiply it by the number of shares that I have exercised. On that, I not only have to pay the income tax, but I also have to pay class 1 employee insurance as well. And my employer will pay class 1A insurance on that as well. This is the disadvantage of unapproved scheme, that you have to pay income tax and NIC. However, if your scheme is approved, there will be no implications on the exercise date as well. They will be out of the scope of the income tax. The only exception is if your scheme is EMI scheme, that is an enterprise management incentive, and in that the exercise date implication will only arise if your employee has granted you, or promised you to give you the shares at a discount. For example, if your scheme is EMI, it is an approved scheme, and your employee has not provided you any discount. He has provided an option that you can buy the shares after 3 years. So after 3 years you buy the shares and that's it. So there will be no implications on the exercise date as well for EMI. But if your employee says that, whenever you'll be able to buy the shares, I'll give you a 10% discount. Now the problem is that the shares have been granted at a discount. So in that case, only in EMI scheme, there'll be a tax implications on exercise date. However, on proceeds or on disposal, there'll be always a CGT. But guys, imagine if my company is offering me an approved scheme and it is an EMI scheme, and the company is not granting me the shares at a discount in EMI. So Tariq, let's say the company has promised me that you can buy the shares after 3 years. I buy the shares after 3 years, and I then, after buying, immediately sells them. Do I have to pay any CGT? Yes, I do have to. I do have to pay the CGT. Why? Because there was no income tax involved. The only tax in approved schemes are CGT. So I have to pay the CGT. CGT will be paid the difference between the market value of the share on which I dispose less the cost on which I have bought the shares. The difference will be the tax. However, when it comes to unapproved scheme, if you exercise the shares and you sell them immediately, you will not be able to, you will not be charged any CGT. Why? Because at exercise date, you have received the shares and you have paid the income tax on the difference between the date on which you have acquired the shares and the date, the market value of the acquired day. For example, if I have my scheme is unapproved, my employer has promised me to buy the shares after 3 years at a discount. So on that date, when I have bought the shares, my employer granted me the shares for $4 per share, but the market value was $5 per share. So I have received a benefit of $1 per share. That $1 will subject to income tax and NIC because my scheme is unapproved. If I immediately sell my share on that day, there will be no CGT. Why? Because the CGT is the difference between the market value on the disposal date and the market value on the exercise date. And my disposal date and exercise date is the same. The day on which I have received the shares as per promise, I have sell them immediately. So there will be no CGT. In unapproved scheme, you only have to pay the CGT if you keep the shares after exercising them. For example, if after 3 years I exercise the shares, I pay income tax and NIC, then I keep them for further 3 years. And if I sell after those 3 years, then the difference between those 3 years will be subject to CGT. Now let's get back to the question and let's answer Demeter. Demeter will exercise the option on 6th April and will immediately sell the shares that you can see. And on 1st December, P granted share options of 3,000 shares in a non-tax advantaged unapproved scheme at 5% discount on the market value of the shares at date. The market value of P shares on December was 4.2. So if you take 95% of that, that will be the price on which he can get the shares because he will be receiving a 5% discount. Demeter will exercise the shares on 6th April 2027. So this is the date, 6th April 2027 will be the date. That is the promised date. P Limited believes that the market value of its shares will be £6 per share on that. So now I have to advise Demeter on that. From where will I start? I will first tell Demeter about the consequences of an unapproved share scheme. I'll start with that, and at the end I will tell him that what is the amount of tax he has to pay whenever he'll exercise. So I'll start with that no income tax will be payable by Demeter on the grant of the shares, grant date. There will be no tax payable by Demeter on the grant date. There will be a tax payable by Demeter on the exercise date, and that will be the difference between the market value on the exercise date less exercise price. So the market value on the exercise date is, you can see it is £6. And what is my exercise price? My exercise price was 5% discount on 4.2 pounds. So what will be my price? To calculate my price, I will take 95% because 5% is discount of 4.2. My cost will be 3.99 less 6. That will be the market value. How much benefit did I make against every share? £2. And for 3,000 shares, I would have made 6,000. 6,030 to be exact. 6,030 will be my benefit. That benefit will be subject to NIC and income tax. And as I have to assume that the Demeter will be higher rate taxpayer in the future year as well, so I'll tell him that you have to pay 40% tax on this. That will be 2412. And if then I'll tell him that as you are selling the shares immediately, there will be no CGT because HMRC charges you the gain on CGT if there is a difference between exercise date and the disposal date. In your scenario, your date is same, so therefore there will be no CGT. In this way, I'll be answering all three questions of Demeter, that no tax on grant date, I'll tell him the date, tax on exercise date, and I'll tell him that there will be no tax on disposal. With that, I've also taught you regarding the pensions. Then I have discussed the exempt benefit section with you in this question. And with the help of this question, I've also taught you about the PPR and the letting relief and their changes in the finance sector. So guys, I would like you to raise your hands who find this question really helpful. Your participation is required, guys. Raise your hands quickly. Thank you. I can see many hands raised. Thank you, guys. There'll be a 10-minute break and then we'll start our next question. Meanwhile, if you have any question, you can put in the question section. After the break, I'll try to answer your questions. Robina, EMI is not always approved. EMI is always approved scheme. However, the tax consequences cannot be always of similar to approved scheme. There is a chance that you are in approved scheme such as EMI, but still you have to pay the tax. And that I have told you that if the shares have been given you at a discount. Tariq, for that you have to read my notes. In that, the criteria of EMI scheme is written, so you'll be able to learn that whether the scheme is for all or not. For you, I can quickly show Tariq that the scheme in this scheme, the CSOP, you have the option that the company may grant to only selected employees. So this scheme is not necessarily be available for all employees. I hope it answers your question. See you after 10 minutes, guys. Okay, guys, let's start again. I'll share my screen with you. The next question that we are attempting is from the March June 19 attempt. I have intentionally tried to select the questions of the latest attempt so that the students can have an idea that what the marking team are looking for in the recent years. So the next question is Rod, March June 19. Again, this paper is also available in the practice platform. So I'll go there and this exam, select on the past papers. There I can find March June 19 exam. Using the navigator, I can select the relevant question and there you can see Rod. However, this question is also available in Kaplan Financial Kit as well. So before I start, I would like everybody to raise your hand and give me a go ahead. Thank you guys. So let's start. First of all, we have to read the preface that has been given to us in the front screen. Rod has requested advice in relation to the capital gains tax implications of selling shares he obtained through his employer's EMI scheme. So Tariq, here comes the EMI scheme and potential income tax relief available in respect of his share of trading loss of a partnership which he has recently joined. Okay, so guys, he'll be Rubina, it will be a good question for you as well. You learn how despite of being the approved scheme, how they'll still you can, have to pay the tax on the exercise date. It's a good question for that. But what I can see from here is that Rod have two issues primarily. One, he wants to know about the CGT implications of the shares he's selling, and that is from EMI scheme. And the second is that he has recently joined a partnership which is a loss making, so he wants to realize a loss. Because whenever somebody joins partnership during the year, do remember that whether it is a profit making partnership or a loss making partnership, the profits or the losses that one has to pay tax on will be dependent upon his basis period. I know that it does ring many bells because student does not normally enjoy basis period, but I'll teach you a technique after which you will not be having any issues. So we'll discuss that later on. So let's read the requirement now in detail. Requirement have the more detailed version of this preface. Calculate Rod's after tax proceeds from the sale of his shares. So what I'm going to do is after calculating the tax, I'll deduct it from the proceeds to calculate Rod's after tax proceeds in Lumber PLC and explain your calculation of the base cost of the shares. Okay, so I have to create a base cost and I have to explain that why I have created this base cost. Okay, the second requirement deals with calculate Rod's share of tax adjusted trading loss in the Thora partnership for the tax years 2021 and 2021-22. Your answer to part B1 should clearly show the relevant basis period. So the examiner has told you because so there are a lot of criticism on basis period by the examining team that the students are unable to realize that this question requires the basis period to be applied. So here they have clearly identified you that this question asks you about the basis period, but I've told you a tip that whenever someone joins a partnership business during the year or they start a new business in our question during the year, that question must be unincorporated business, that is sole proprietorship. It cannot be a company because there is no basis period for the company. The basis period only applies to individual. So if he has joined a partnership in our question, or if he has started a new business in our question, you should be alert for the basis period. It may not apply, but you should be alert. Here it is applying, so I have to tell about the basis period for these 2 years. And for basis period, the rule of there are two rules: rule of the first year and rule of the second and continuing period. So there are only two rules, and he has tested both here. In 3, or in part 2 of part B, state how ROD is able to relieve the trading loss calculated in B1, the loss that I'll be calculating in the above part, as early as possible, and explain with supporting calculations the total amount of income tax saved if ROD follows your strategy. Okay guys, so I not only have to tell the strategy to ROD, but I also have to tell that what is the amount of income tax that ROD would have saved. Now this question requirements telling you how annoyed the examining team is because you guys don't know that if he asks you to tell you that what is the possible possible relief that can uh, allow you to claim your relief as early as possible, you guys never tell that how much income tax will the client save by following your strategy. So he has clearly told you to do this. Even if after mentioning this you won't do this in your requirement, the examining team will not be giving you any marks regarding this thing. But do remember that even if I've calculated wrong losses in part B1, I do not have any idea how basis period applies. It has no relation to part B2. If I'll be able to explain, assuming that my calculation for part B1 is correct, that which option should we follow and what will be the tax savings, I'll be scoring marks. So if you guys have any question before I start reading the question, please ask it. Otherwise, raise your hands to give me a go ahead. Okay, thank you. Now, let's read the scenario. And do remember, when you'll have the question in front of your CBE screen, it may be a on-demand session that ACCA may offer, or you may have to give the exam in the examining hall. Either way, do remember that the same screen or the same outlay of the question will be in front of you. So always read the preface first, then read the requirements first, and lastly read the scenario. You have the choice to use word processor or spreadsheet for each and every part. I'll prefer that for at least for section B questions. Normally, they are not computational questions, although you have to do a little bit of computations to support your explanation. So try using word processor for mostly of these questions. However, in section A question, there are certain requirements that are entirely computational. For them, you're allowed to use spreadsheet. Still, it is your own opinion. I have told you mine. So let's discuss about Rod. Rod is a resident and domiciled in the UK, was employed for many years in LPLC before taking early retirement and joined the Thora partnership on 1st December 2020. Made no disposals for the capital gains tax in the tax year other than the sale of shares in LPLC. In May 2016, LPLC granted Rod shares to purchase 20,000 shares under the EMI scheme. Okay, so that would have been the grant date. There are no tax implications even if it would have been an unapproved scheme, but EMI is an approved scheme. The market value of the share at the date of grant was 2.6 and the option price was 2.3 per share. Now Rubina, you tell me that did the LPLC granted the shares at a market value or at a discount in EMI scheme? Tariq, you also tell me please. Discount. Thank you. Guys, everybody else can answer to me as well. What do you guys think? That whether the option is presented at provided at a discount or at a normal value? At a discount. Now, guys, if you look at my notes, I'll share with you on my screen. I have clearly written here that in the tax treatment of EMI scheme, that normally no tax, income tax or NIC is chargeable on either the grant date or the exercise date, provided the option was not provided at discount, which means that only way that a discount that you need to pay tax on an approved scheme is that if it is an EMI scheme and the option is provided at discount. That is the only instance that you may have to pay the tax on grant date provided that your scheme is an approved scheme. If the option is granted at discount, I have written here that charge to income tax and NIC at exercise date equals to market value at the grant date less exercise price. The difference between the both will be the chargeable to income tax and NIC. CGT may apply if later on you sell the shares. Again, in this option, if you sell the shares immediately, obviously there will be no CGT because you have sold the shares immediately. But if you keep the shares and sell them after a certain period of time, there'll be a gain chargeable. That will be the difference between the market value at the disposal date and market value at the exercise date. So again, let me tell you that there are three instances: grant date on which the company makes the promise, exercise date on which the employee actually gets the shares, and disposal date on which he sell the shares. Exercise and disposal date can be same if the individual wishes to. If they wish to keep the shares, they can sell at some later point. If the discount was not provided, if the option was not provided at a discount in EMI scheme, the ROD would have saved the income tax and NIC charge at exercise date. Now, let's get back to the question. I can zoom it for you guys. Okay, so till now, important points are the joining date of partnership, that is 1st December 2020. Then the important date is that the option was provided at a discount, that is difference between 2.6 and 2.3. That is the difference. That is zero point 0.3 per share till now. And if you multiply it by 20,000, you'll be able to compute that what should be the amount on which income tax and NIC should be charged. Rod exercised all options on 1st June 2020 when the market value was 3.9 per share. Whenever he exercises and whatever the market value on that date is, it is not relevant for us. The market value at the exercise date is not never relevant for us. That is why I have striked it off. How can you strike it off? Select the text and click on strike through. It will cancel it. It will help you that this value is not relevant for you in the question. All I am concerned is between 2.6 and 2.3. That is the value between the grant date and the exercise date. Now, Rod sold all the shares on 1st December 2020 when the market value was 4 per share. It means Rod has not immediately sell the shares, he kept the shares and then sold them at $4 or £4 per share. So I can calculate the proceeds myself. £4 times 20,000. I can calculate the proceeds. I can calculate the cost myself as well. Now, the gain is eligible for business asset disposal relief. The students that have not attended yesterday's lecture, I would like to tell you that entrepreneur relief has now been renamed as business asset disposal relief in the Finance Act 2020. So it is the new name of ER. He has told me himself that the ER is available. Even if he would not have told you, I am telling you a tip. Whenever one sells EMI shares, business asset disposal relief is available. And guys, do you know that there are certain conditions? I can tell you the conditions. There are three conditions of ER or the business asset disposal relief, BADR, we now call it. There are three conditions. You should be the employee of the company. You must have more than 5% of the holding, and you must be you must keep the shares for 12 months. These are the three conditions. Can you please tell me that for which condition in EMI shares you have the relaxation, that if you have the EMI shares and you do not fulfill that one condition out of the three conditions of BADR, you'll get the BADR anyways. There is a relaxation of one condition. Does anybody know? Okay, I'll tell you guys. No, Tariq. The correct answer, yes. Thank you, Ashik. You're right. The 5% holding. For EMI shares, even if you do not have the 5% holding, you still get BADR. Otherwise, for every other share disposal, you must fulfill all three conditions. You must be employee, you must have more than 5%, and you must hold the shares for qualifying period. But only for EMI shares, you have the relaxation that even if you do not have 5% holding, you still get the BADR. So that is why do remember that the employee condition must be fulfilled, because you will not get a share option if you're not an employee. So you will be employee for sure. Now, what depends in upon the holding period? Here it has said to me that I have to assume that the BADR is available. Otherwise, only the exemption of 5% holding is applicable. I hope that this has added something into your knowledge. Now, the gain is eligible for BADR, so it is better that before I move on to the next part, let's calculate using the scratch pad the answer to our question. So I'll quit the requirements for the time being. I'll open the scratch pad. I'll write here by opening the question side by side that what are my sale proceeds. It was clearly given to me that proceeds are £4 times 20,000. So obviously it will be 80,000. Cost. To calculate cost, normally what we do is we multiply exercise price. So in our question, the exercise price is 2.30 times 20,000. That is 46,000. But what is happening here is, here the shares were, or the options were granted at a discount. So the difference between the market value at exercise date and the market value as at grant date should have been, oh sorry, the market value at grant date and the difference or between the exercise price would have been the chargeable factor here. So what I have to do, I have to add that, that is 2.60 was the market value at grant date less 2.30 was the exercise price. Whatever my answer is, I have to multiply it by 20,000. It will be 0.3 times 20,000, 6,000. So 6,000 will be added as a cost, and effectively it will be deducted from the proceeds. So I'll write 6,000 here. A shorter approach would have been if you multiply straight away 2.6 times 20,000, and a paragraph beneath you can write that although we should have taken 2.3 as a cost, but because the shares have been granted at a discount, the difference 0.3 between the market value at the grant date and the exercise price will also be added into the cost. And you remember, he specifically asked me to explain the base cost and the reason of the base cost. Now that is the reason of the base cost. After doing your calculation, you write a paragraph beneath that in normal circumstances, if the shares would not have been granted at a discount, you would have taken the exercise price as a cost. However, as the options are granted at a discount, we will take market value at grant date rather than exercise price as a cost. And the reason is the difference between both will also be subject to IT and NIC. But the problem is he has not asked me to calculate income tax computation. If you read the requirement, he has only asked me to calculate the capital gains tax payable, and the after tax proceeds he has asked me to calculate. So I'll not only calculate the tax, then I will then deduct it from the 80,000 and calculate the after tax proceeds. So if quickly in the question answer section you can compute the gain for me, 80,000 minus 46,000 minus 6,000. I guess it's 28,000. Now, I'll deduct my annual exemption amount from that as it is a capital gains. So annual exemption will be 12,300. I'll deduct that. So my taxable gain will be 15,700. 15,700. Now all I have to do is I have to apply CGT on that. On which rate the CGT will be applicable, guys? Answer me in the question section, please. That was quick, Tariq. Thank you, Juliet. Bala, yes, reduced rate, but what is the rate? Tell me the rate. No, Ashik, 10%, because it is mentioned in the question that the gain will qualify for BADR. Yes, thank you, Fawad. Thank you, Mohammad Saqif, Sajid. Thank you. Okay, guys. So 10% means 1570. So now I have to calculate one more thing, that is the most important thing, in fact, after tax proceeds, in which the clients are normally concerned. If you are sitting in front of a client, do remember that all he'll be concerned with, what is the amount of tax, so I can quickly calculate how much money will be in my pocket after getting rid of all the taxes. I, because run a consultancy, so it is my day-to-day routine to deal with clients. So I am telling you that this paper is of practical nature, and it will help you a lot. So nowadays, even if you are not, residing in UK or living in UK, there are many companies across all over the world, especially the third world countries, that are providing services to UK-based chartered accountancy firms, such as mine consultancy. We are providing the services to a UK accountancy firm as well. So don't think that your this knowledge will not be applicable in your practical life. If you may secure a good job in one of those firms, you never know. All of this knowledge is required there. So my proceeds are 80,000, and by deducting 1570, I'll be left with 78,430. These are my after tax proceeds. Now, do remember, if I am the examiner and you will just do computations for me in this, I'll be giving you out of 8 only 3 marks. That is how less the competition's only worth. Why? You have to explain me being a client, treat me like a client, and explain me what these are. Imagine if these calculations you give to a non-tax person who's not an ATX student. It will be French for him. He will not be able to understand what these are. So you have to explain that, look, your scheme was HMRC approved scheme. It is an EMI scheme. There are 3 instances granted. I mean, you don't have to clarify that much, because normally he knows that, what is grant date, what is exercise date. All you have to tell him is the tax implications, and tell him that there will be a tax implications, that is CGT implications, and your cost will be this, and the reason of your cost is because the option have been granted to you at a lesser price. So with that, guys, I have now also explained EMI scheme. We have previously done a question with an unapproved scheme, now approved scheme, and both of the question are from latest attempt, so you can see how favorite the topic is, the share option scheme of examining team. So you should have a good knowledge about that. So coming back, let's talk about Thora partnership. Has been carried on by many years by two partners. A and B prepares accounts to 30th November annually. So that's the year end of partnership. Do remember that. And also do remember that I have joined the partnership on 1st December 2020. So if I may ask you to quickly tell me how many months in my tax year, the tax year 2021, I was with the partnership. For how many months? Very good, Rubina. from December till March. Will not take 5 days of April. So from December till March, 4 is the correct answer. So now you guys have answered yourself. Now do let me know how much losses will be adjustable in this period to be claimed. Not the amount. I'm again talking about months. For how many months apportioned losses will be applicable? Losses of how many months? Thank you, Rubina. You are correct again that as we have joined the partnership during the tax year, whatever, either it would have been profit or the losses, they will be time apportioned up till the tax year. Okay. So do remember that. Let me take you to my notes of basis period and teach you quickly about what basis period normally is. Actually, what happens is that the HMRC tax year runs from 6th April to 5th April, and the individual runs or makes their accounts as per their convenience. Some few people follow the calendar. For example, they choose 31st December as their year end. Few have 30th November. Few have 30th June. Whatever your convenience is. Now we have to come up with a method which aligns our period and HMRC's tax year. And that is what you call basis period. Now, if you open my notes in income tax, there's a section called basis period. Here I have given you in a chart that for the first year, whenever you have to make a basis period for the first year, the time portion is pretty simple. The date on which you start the business or joined a business till from there till the coming 5th April. So here you guys have already told me that for the first year, he'll be able to claim losses worth of 4 months. So whatever the total losses are, we will take the share of rod first and then we'll multiply it by 4 by 12. So we first have to calculate the total losses, then calculate rod share and then we'll multiply it by 4 by 12. So that is the basis period for 21 and 2021. But in the question they have asked us the basis period of 21-22 as well. So do remember for the second year, the rule is quite easy. All you have to do is that you have to look that what is your next tax year. Obviously, if this tax year is 2021, you guys tell me in the question box what will be the next tax year. 21-22, obviously. Okay, guys. So all you have to do is in the next tax year, 21-22. Do remember that the date of tax year cannot change. However, your year end can change. So in the next tax year, is any of your accounting period ends? So you let me know that between April 21 and April 22, is there any accounting period of Thora partnership ends? They normally produce the accounts for November 30th November. So their account period is a period of account is ending on November 2021. You just tell me that does this date fall between tax year 21-22 or not? Quickly, guys, more answers, more answers. Yes. So all you have to do is I'll get back to you to my notes. All you have to do is that you have to check that in the next tax year, is there any R period of account ending? If the answer is yes, you just have to check its duration. If it is a complete 12 months, whatever the accounting profits you have earned in that period, it would be subject to tax. Now you will say, sir, there will be some double taxation in this case. Yes, there will be some overlapping profits. If your answer is less than 12 months, then what will you do? You take first 12 months of the business trade. If your basis period, if your accounting period was less than 12 months. If your accounting period was more than 12 months, then you will take last 12 months of the basis period. But I'm not going to discuss basis period in detail. All I want to ask you is, you tell me which scenario is tested in Rod's question. Thora partnership accounting period is for complete 12 months, less than or more than? Answer me quickly. Quick, quick, quick. More answers. Tarek, all you have to tell me that Thora partnership is preparing accounts for complete year or not. No, Rubina, do remember that Rod has joined the partnership now. The partnership is operating for several years and they are preparing their accounts each year. So by entering Rod, the account period does not affect because they are preparing the account from December to November every year. So the answer is yes. So what I say it is copy paste, and the professional name of copy paste is CYB. What do you mean by CYB? It means current year basis. Current year basis means that you'll copy paste whatever you have given in the question. But guys, the trick here is that is correct only if you have made profits. The rule is different for losses. And the only difference is that there are no overlap losses. If you have a loss that you have claimed before, you cannot claim the loss again. Now you tell me that Thora is preparing accounts, Thora partnership is preparing accounts for 1st December 2020 till 30th November 2021. This is their 12 months. Rubina, you tell me, out of those 12 months, how much losses have you claimed being a rod in the last tax year? Thank you, Bella. That was quick. The correct answer is 4. So, Bella, you tell me then, how much losses will the rod be able to claim in the next tax year, provided that no repetition takes place? 8. Thank you, Bella. However, if it would have been a profit question, Tariq, the answer is CYB. Whatever given in the question, I would have copy pasted it. But because it is a loss question, I cannot claim overlap losses. In profit question, you always do CYB and there are always overlapping profits. So, guys, quickly answer me. Till now, have you understood? Shall I start calculating the losses with you? Thank you, Tariq, Rubina, you, Bella. Yusra, you have to give answer here in the where you have asked me where to give answer. You have to write your answer here. Okay. Rubina, if any point is not understood completely, because the lecture is recorded, you can come back and see that again. I'll go to the question and I'll open my scratchpad again and I'll start solving this and I'll try to calculate the loss. So scratchpad, then I'll open the question. Along with the scratchpad. Now, for the tax year 2021, 20/21, whatever the loss is, it will be loss. Because I haven't calculated the loss, so I'm assuming it XX times 4 by 12. And for 2022, sorry, 21, 22, whatever the loss is, loss times 8 by 12. Now, let's read the question so that we can identify that what is the loss. The loss is 47,000. The Thora partnership profit sharing arrangements are, the new profit sharing arrangements are that the loss is shared equally between A, B and R. But they are getting salaries. A and B are getting salaries for the from the partnership. Guys, you tell me that by giving the salary, will the loss increase or are the salaries included in the losses? You just tell me increase yes or no in the question section. Will the loss increase after giving the salaries, or are they already included in salary? Yes or no? All of you who have said yes are correct, because in partnership, the partnership first compute the profit, and on top of that, from that profit, you then pay the salaries. So Rubina, no, they are not already included. They will increase the loss. Do remember, the computation of partnership is different from the computation of sole proprietorship. From there, the final profit is that includes all the salaries. However, for partnership, partner salaries are never included in the profit. You first calculate the profit without partner salaries, then deduct the partner salaries from there. If it would have been a profit, by deducting the partnership salaries, the profit would have decreased. Here it is a loss. So guys, what does it mean? The loss will increase by deducting the salaries. So how much loss will increase? Tell me the amount in the question section, please. More answers. Ashik, Tariq, you're right. 40,000, because each partner is getting a 20,000 salary. Rod is not getting any salary, 20 and 20. So we have a losses of 47,000 in the question. On top of that, 40,000 salaries. So that makes our loss 87,000. Now guys, you do me a favor. Multiply 87,000 by 4 by 12. I mean, I can claim the complete loss. Am I right? Or do I have to portion first with my share? Do I have to portion it, guys, with my share? The answer is yes, guys. I have to portion it with my share. This loss is attributable to all the partners. What will be my share? My share will be 87,000 divided by 3. Tell me the answer in the question section, please. Tariq, your answer is right. The answer is 29,000. This is my share of loss, because the total loss was 87,000. Divide it by 3. My loss is, or my share of loss is 29,000. But the problem is that 29,000 is for the complete year, Tariq. Out of that, 4 months shall be used in 2021 as per basis period rules, and 8 months can be used in 21-22. So guys, quickly in the question section, multiply 29,000 4 by 12 and tell me what is the loss that I can claim. Thanks Bella, thanks Tariq. Rubina, you please calculate it as well. Other students, Ashik. Right, 9667, correct. And then please multiply it by 8 by 12. Yes, Sakif, Mohammed Sakif, you're right. Just round it up. So guys, multiply now the remaining. Yes, it is 19,333. That is the correct answer. 19,333. All you have to do is deduct 9667 from 29,000. The remaining answer will be claimable in the next year. Now, what do you have to do? You first have to do the computation and then explain to Rod that what is happening. Tell him that as this is your first year, this amount of loss will be claimable in the first and this in the second, and the losses are not overlapped. Therefore, these are the only losses that you can claim. That's it. So that part was primarily dealt with computation. So you could have used spreadsheet for that rather than word processor. Even if during the exam you feel, okay, I'm not comfortable on spreadsheet, just switch on, just copy your workings, switch it on spreadsheet from word processor. Now, coming back to the question, guys, he has asked me that the loss, whatever the loss that I have calculated in the above part, How can I claim as early as possible? Now, do remember, in real life and in the advanced taxation exam, it is the most common demand of the clients. It is the most common demand of the clients. And what is that? How can I relieve the losses in the most efficient manner as soon as possible, as early as possible? This is always the question. Do remember, if the client's priority is not the tax efficient manner, there are two options. You can ask the client, do you want to relieve in the losses in the most tax efficient manner, or you want to relieve the losses as early as possible? If he says that he wants to relieve the losses as early as possible, you should remember that carry forwarding the loss should be the last option for him, because in that you have to wait. You cannot relieve the loss immediately. If you want to carry forward the loss, you have to wait. So carry forward should be your last option. You should think about all other reliefs. Now, what other reliefs are available for one if they suffered loss? They have, apart from carry forward option, they can set off against total income. If they're seizing the business, then they have terminal loss. So here they are not seizing the business, they have instead started the business, so terminal will not be applicable. Carry forward is the last option. Then I have set off against total income, and other are early year loss relief. Early year loss relief is only applicable if the client or if the person faces loss in the first 4 tax years of his business, whatever sort of business it is. Now, guys, you tell me in the question section, do you think that early year is available here? Yes or no? More answers, please. Yes, it is available, guys, because in the very first year of joining the Thora partnership, Rod has suffered loss, so earlier is available. How earlier year loss relief is used? You have to use your incomes, the oldest one the first. It works on FIFO basis. So you have to use your oldest year income the first. And in our case, he has first suffered the losses in 2021. So the oldest income for him to relieve against is this one, 82,000. So what he can do is he can claim that loss against that income. How much tax will he be able to save? How much tax? What is the percentage of the tax that he'll be able to save if he relieve the losses against that income? Thank you, Bala. 40%, because he was the high rate taxpayer in that 82,000 employment income he had. So he will be able to save 40% of the tax. So now all you have to do is whatever the tax you have calculated in 2021, multiply it by 40%. So in my case, firstly, I have calculated the loss that was 9667. Then the second loss that I have calculated was 19333. So in 1 year, you can say that he'll be able to save losses of 9667 times 40%, and in the other year you can say that it can save losses of 19333 times 40%. So one time the amount will be, if somebody can quickly take 40% of 9667 for me and post it in the question. Yes, 3867 is the correct answer. Thank you, Bala. Now, the next loss was 19333. Obviously, he can save the 40% tax as well in that year as well, because he is a high rate band taxpayer in that as well. So if we can take 19333 times 40%, 7733. Thanks a lot, Bella. So these are the total tax savings. However, if you read the question, if you read the standard answer, there was a point mentioned there which student it is difficult for students to highlight in the exam conditions, that in 2018-19 Rod's income was so high that he may not be able to entitled of full personal allowance because his income was exceeding 100,000. If he claimed the relief in 89 against the income of 1819, his income will reduce from 100,000 and he may be entitled to claim the full capital allowance. However, I do not expect you to write this in the exam conditions. Even if you forgot that point, you still will be able to score very good marks because that point is only worth a 1 mark out of the total marks. Guys, I hope you are not facing any issues in hearing me. If you can quickly raise your hands and let me know that my voice is clear. Okay, Tariq, please check that the problem is at your end. With that, guys, I have summed up this question as well. Again, we'll take a 10-minute break and then we'll start doing our last question. Meanwhile, you can ask your questions. I may not be able to answer a question at the end of the session, so I will recommend if you have any questions, start asking them now. Here it is pretty easy to mark yourself on a self mark. All you have to do is first go through the answer. When you go through the standard exam answer, in the end of the exam, you have the marking scheme available. So you can see, check your answer, and you're able to see that how many points you have scored correctly. Mark yourself that if you would have been your marker yourself, how many marks you would have given to yourself. In this way, you can mark your exams. Okay, guys, let's start again. Please raise your hand and give me a go ahead. Okay, so most of you are ready, so let's start. The third question for the day is init, that is of September 18 attempt. So let's go and open a September 18 attempt on the CBE practice platform. Guys, I want to take feedback of yours. How many do you of you think that practicing on a CBE platform on the webinar is a better approach as compared to the stylus? Raise your hands, as the exams are CBE now. Thank you. I can see that most of you agree. So I'll follow the similar approach in my future webinars as well. Okay, so I can quickly navigate to the questions by scrolling down. Akil and Damia we have discussed yesterday. Today we're going to do the other question of this attempt called init, and it requires advice on the capital gains tax and on the value of value added tax, implications of transferring her incorporated sole trader business to a newly incorporated company. Now, I'll stop here, and what comes into my mind is that if I search about this particular scenario in CGT, that when one transfers all of his business assets to their companies, there is a relief available. Can anybody tell me in the question section that what is that relief? Thank you, Ashik. You are right. Anybody else? Yes, Rubina, you're right. Incorporation relief. Now I have something in my mind to write about that might be the question asking me about incorporation relief. And now let's talk about VAT, value added tax. When one whose self employed business is registered as a value added tax business, when he transfers his that business and forms a company, he transfers all of his business to a company. Do you know any specific rule about the registration of that? I'll give you a hint. It is regarding the registration of that. Now guys, what happens is if I am trading as Saad and Co, and Saad and Co is a self employed business, it is not a company, and I then form Saad Limited and transfer all of my business to Saad Limited. My previous business, that is Saad and Co, was registered with HMRC for VAT. Can I transfer my registration to the new business? Yes, I can. In CG, in VAT, this provision exists. You can transfer your registration number to the business. However, registration name will be changed. Rubina, you're right. And there are certain conditions for that. One of which is, Tariq, you are right, that the business should be transferred on going concern basis. So why I am thinking this? Because whenever I'm reading a question, I'll start searching in my mind that with that particular scenario, what rules applies. So when I'll be answering the question, it will be easier for me to think in a specific direction. Okay, guys, so let's read the rest of the question. Newly incorporated company N Limited, she also requires information for the tax implication of alternative ways of extracting profits from the new company. You know, whenever the clients come to visit me or to see me in the real life, and they ask me, Saad, whether should I make a limited company or not, I advise them according to this scenario. And the next question is always, in self-employed business, I know, Saad, that all of the profit after paying the tax is mine. But how can I extract the money from my company? So guys, can you tell me the two ways that are normally used to extract the money from the company? You're right. One way is dividend, Tarek and Rubina. Any other way? Tarek, not specifically benefits. You would rather say employment income. In that, you will be able to claim the cash income as well and the non-cash benefits as well. So, but for that, do remember you must be an employee as well as the shareholder of the company. If you're only shareholder, the only choice you have is the dividend. So there are only two ways to take out the money from the company in normal circumstances. Number one is to take out the salary, and number two is to take out the dividend. And normally, the next question client usually ask is, okay, Sad, what is the most tax efficient way? So I tell them, look, that if you take out of the dividend out of the company, from your perspective, the individual perspective, you will be taxed at a lower rate because dividend has a lower rate, 7.5% for basic and 32.5% for higher. This is one advantage. Second advantage is the first £2,000 worth of dividend will be taxed at 0%. That's the second advantage. Third advantage is that you will not have to pay any NIC on dividends. You're right, Tariq. These are the three advantages. Now, guys, what is the disadvantage of taking dividend from your company? Tell me your answers. Tariq, you're right, not deductible. But what do you mean by not deductible? Explain. Guys, actually what happens is, if you take a salary from your company, it allows your company to deduct that salary as an expense, and it will lower the profit of your company, thus will allow you in corporation tax savings because the company has to pay corporation tax on this income. However, if you take dividends from your company, the dividends are normally deducted from profit after tax. Therefore, it will not result in any corporation tax savings. So that is the only disadvantage of the dividend, that the company will not be able to make any savings on corporation tax. Rubina, this is the advantage of a sole proprietor business, that you can take money whenever you want. I was asking about a disadvantage of dividends. Okay. Okay, guys. Now let's talk about the benefits or the disadvantages of the other method, that is salary. The benefit of the salary is what we have discussed, that is the disadvantage of dividends. So their disadvantage is its advantages. That is, when the company pays salaries, it will be able to save corporation tax on that because it will be an allowable reduction while calculating the taxable profits. So that is an advantage from the company's perspective. Whatever are the advantages of dividends are the disadvantages of salary. For example, salary will be taxed at a higher rate as compared to dividends. Salary will be taxed at a higher rate, that is 20, 40, 45% as compared to dividends. On dividends, you do not have to pay NIC. On salary, you must have to pay class 1 employee NIC yourself, and your employer, that is your company, will pay class 1 employer NIC. So these are the disadvantages that you will have to face, if or advantages if you choose any of the options. Now all I have to do is, Rubina, by reading the question, I have to use my this knowledge and relate it to the scenario. Okay. Now Let's read the question. First, I'll read the requirements as always. Explain how E can obtain relief for trading losses of 51,000 brought forward in incorporated business at 6 April 2021. If the business is a loss-making business and you convert it into company, you first have an unincorporated business which was making loss, you now want to convert it into a company. There is a special loss relief available that allows you to carry forward all of your individual losses to your company, provided you hold substantial amount of holding of your new company. So I have to read the question to check that is E 100% shareholder or a substantial shareholder of the company. If that is the case, he will be able to carry forward his losses of unincorporated business to the company. Now, second part is explain why the transfer of E business to N Limited qualifies for incorporation relief. So you must know the conditions of the incorporation relief. If E is satisfying those conditions, then obviously they qualify for the relief. And here the requirement is giving the hint that they does qualify. All you have to tell is that why does they qualify? The answer should be simple, because they are meeting the criteria, but you have to mention what is the criteria in order to qualify the incorporation relief. Then there is a rule of and. Rule of and means that the requirement has two parts. First part is before the and the second part is after the and on the assumption that E does not elect to disapply this relief, calculate the balance on her account with N Limited after deducting the cash to be withdrawn to pay any capital gains tax. I do not know what account is he talking about. I will read the question and find out. C. Advise E of the impact on the total amount of tax payable by both herself and N Limited. Okay, I have to tell them the tax payable in both options, but which both options? That number one, if instead of a dividend of 15,000 she receives additional salary of 15,000, or she withdraws 15,000 from her loan account from the tax year 22-23. I still don't know that this loan account is. For that I have to read the question. However, I do know that what will happen if she takes additional 15,000 salary instead of dividend. It is simple, Rubina, that she has to pay higher amount of tax on that. She has to pay the NIC. Her company may has to pay employer NIC as well. So that will happen. That's what will happen if she takes the salary. For loan account, I have to read the question. Advise E of her administrative obligations under the VAT arising from the transfer of her business of Unlimited, and whether or not she's able to transfer the VAT registration from her unincorporated business to N. That I have already answered, that she can, provided that she must satisfy some conditions. And in the requirement, it clearly states that I should assume that the transfer is of a going concern and it will apply for VAT purposes. So obviously, if the transfer is going concern, she is the major shareholder of the company and she changes the name of the registration, she can transfer. So let's talk about part A, B, and C here. For that, let's read the question. Before I start reading the question, I want everybody to raise their hands and give me a go ahead. Okay, guys, give me just 2 minutes, please. Okay, guys, let's continue. So I'll zoom the question for you guys so that you can clearly see the question. E has been in the business as unincorporated sole trader for many years, receives dividends from portfolio of investment of 1000 each year, which means that if she were to receive dividends from anywhere else, her nil rate band of 2000 will decrease by 1000 because she's already receiving dividends from somewhere else. He has no other income, is a higher rate taxpayer for all tax years and relevant tax years, will transfer all the assets and liabilities of her business to N Limited on 1st October 2021, will make no other disposals for CGT purposes in the tax year 2021-22, will be the only director and shareholder of N Limited. Okay, that clarifies a lot of things, but I'm still unclear about that loan account that I was mentioned about. E unincorporated business. At 1st October 2020, E has trading losses brought forward of 51,000. With that, the first requirement is related. In the year ending 30th September 2021, E business will have a taxable trading profit of 42,000. So in October 2020, she faced a loss 51,000. This year, she realized a profit of 42,000. Okay. So e-business will have this trading profit prior to transfer to N Limited, and it is registered for VAT. So guys, I'll stop here and you tell me that what is the rule? Does she have to adjust the loss of last year 51 against this year's 42 profit, or can she straight away take it to her company? You tell me. Current year, for current year you can write CY, and for company you can write CO in the question section. Guys, what is the correct approach? Does the loss needs to be adjusted against the current year profit first, or can she straight away take to the company? Rubina, you're right. Juliet, you're right as well. She must have to set off the loss against the income from the same trade. That is what the rule is. That if from which trade you have received a loss, you also have the income available, you must offset your losses against that income first. So the amount of losses are 51 and the amount of income is 42. So 51 less 42 equals to 9,000 of losses that will be remaining. Now guys, can she now bring those losses to the company? Those 9 losses? Yes. And she can set off against her total income as well. If she were to receive any salary from the company, she can set off against her total income as well. If she were to receive any salary or dividends from her company, she can then set off against her total income as well. Rubina, first of all, the amount of personal allowance is not 12,300, it is 12,500. Secondly, there are certain rules in which you can carry forward or adjust the loss as per your discretion, and there are some in which you can't. Okay, so read my notes for that, you'll be able to understand. Okay guys, so getting back to the question, in first part what I'll be writing is that the losses received the losses realized must be offset against the profits that are received from the same trade first, and then any other loss can be relieved. Therefore, E must have to offset the losses of 51,000 against the profit of 42,000, and any unrelieved losses that are 9,000 can be carried forward. Then what I can then mention is that she can carry forward her loss, and in the next year she can offset those losses against her total income or against the salary or dividend she received from the company. She can also transfer these losses to the company if she satisfies certain conditions, that is, owning majority of the company. And what do I mean by majority? At least 80% is the rule of HMRC. So you can see that she is the only shareholder of her company. So she satisfies that condition that she must own at least 80% of the shares. So with this, we'll sum up the part one of the question or the requirement A. Now, if I quickly look at the requirement, what was the next requirement? Explain why e-business to N Limited qualifies for incorporation relief. So what I'll do is I'll open my notes and we'll see that what is the criteria of incorporation relief written there. So then we can check that whether E satisfied that criteria. If yes, then obviously she can claim the incorporation relief. Okay, guys. So unincorporated trade transfer to a company on going concern basis, that is the first criteria. All of the business of unincorporated trade except cash should be transferred, and the consideration should must wholly be in the form of shares. These are the three conditions. So let's read the question and check whether she satisfied these conditions or not. If yes, then I'll ask you guys. Consideration to be paid 1000 ordinary shares in respect of 85% of the total value of the consideration of the business. The remainder of the consideration will be left on the loan account payable by Unlimited to E. Now understand what the loan account is. Basically, her company is paying her 85% of the amount as a shares of the items which she transferred to the company, and remaining 15% the company is still owed to her. So what will happen is the company needs to pay furthermore 15%, and she has a loan account with the company. That company owes her 15%. So if she takes out money from her loan account, that will not give rise to the tax. Why is that? Because the company is paying her the amount the company owes to her. It will not be treated as a salary or dividend, and thus she'll be able to save the tax on that. So do remember that in the last part of the question, we will write that drawing the money out of the loan account of the company will not give rise to any tax. He will draw cash from the loan account to pay any CGT liabilities on the transfer of the business, if there will be any CGT liabilities, because mostly most of the gains will qualify for incorporation relief. Now they have asked me to calculate the gain as well, and the gain is pretty easy, guys. That all you have to do is these are the value or the market values of the asset, and these are their cost. All you have to do is deduct the cost from the market value and you'll be able to compute the gain. So for goodwill, the cost is zero, so the gain will be 100,000. For workshop and inventory, we have to calculate the gain and compute that what is the correct amount. So for workshop, the gain will be 122,000 minus 55,000. Let's quickly calculate 122 minus 55. It's 67,000. So I have a gain of 100,000 on goodwill. Oh, sorry, 83,000 on goodwill and 67,000 on workshop. Guys, I want to ask you, will I be including the capital gains tax on inventory as well or not? I know that for on liability, there will be no capital gains tax, but will the inventory be subject to capital gains tax? Thank you, Fawad. Thank you, Ashik. No current asset is subject to capital gains tax. No current asset, whether inventory or whether anything. So do remember that none of them will be subject to capital gains tax. So for goodwill, the gain is 100,000. For workshop, the gain is 67,000. You have to add both. You'll have the total gain available. Out of that, 85% will be available as incorporation relief because the consideration was not in the form of shares. And if you look at my notes, I have clearly mentioned that if you take the consideration wholly in the form of shares, complete gains will be deferred. However, if the proceeds are not completely in the form of share, rather there is a mix of shares and cash or any other thing, the IR incorporation relief gets restricted, and that is share proceeds divided by total proceeds. 85 divided by 100 multiply by the gain, that is 167,000. So I'll open the question, I'll open my scratch pad, and I'll write here that gain on goodwill was 100,000. For the workshop, the gain was 67,000. You know that all I have done is deducted its cost from the proceeds. Total gain is obviously 167,000. Can you guys quickly let me know that what is the 85% that qualifies for IR, that is incorporation relief? 85%. So let me confirm, 167,000 times 80%, 85%, sorry. 141,950. Thank you, Bala. Your answer is correct. 141,950. That is the incorporation relief out of the total gain. So what is the chargeable gain then? 167 minus my answer. So I'll deduct 167,000 from my answer. 25050 is the chargeable gain. 25050 is the chargeable gain. Now guys, whatever the gain that is left, is there any other relief available for this gain, this chargeable gain? Quickly answer me. Is there any other gain that is available for this gain that is not covered by the incorporation relief? Okay, do remember BADR, business asset disposal relief, that was ER before, is available. Why? Because whenever you sell the business to even your own company, it is considered that you have ceased in the capacity of a sole proprietor. So you will be considered that you have ceased your business in the sole proprietor capacity and now started working as a company. It means that if all of the gains, all of the assets are transferred to the company, any gains that are not covered by incorporation relief will be covered by BADR. So do remember that this gain, the remaining gain, will be subject to BADR and will be taxed at 10% rather than whatever the rate applicable on E. That is, she's a higher rate taxpayer, so she would have to pay 20% otherwise. But guys, you tell me that all of the assets qualify for BADR on which the sum of the gain is not chargeable, or is there any asset in the question that is not subject to or not available for BADR relief? Out of those two assets, goodwill or workshop, is there any asset? Very good, Rubina. BA, in BADR or in business asset disposal relief, the goodwill does not qualify if you sell the business. But there is one problem, Ashik. Problem is that I do not have the separate gain available for the goodwill. Why? because in my answer that I have calculated on my scratch pad 25050, I do not know that how much is for the goodwill and how much is for the workshop. So can you tell me any method with the help of which I can calculate it separately? Apportionment, you're right. And the best way to apportion is that what we can do is out of the total gain that is of 167, we can check that how much goodwill is worth and how much workshop is worth. So it is pretty easy. You take goodwill in the numerator divided by total gain. It's almost 60%, 59.88. So I can say 60% of the gain belongs to goodwill and 40% of the gain belongs to workshop. So I can then make two columns, BADR gain and non-BADR. 60% of the total gain is non-BADR and 40% is BADR. So 40% of my gain that I have calculated here is 25050. What is the 40% of that? 10020. 10020. And non-BADR gain is the remaining. So if I deduct 25050, 15030, 15030 is the non-BADR gain. In this amount, the tax will be applicable at 10%, and in this amount, the tax will be applicable at 20%. If I would doing this question in the exam and I am short of time, I do not have the time for the complete calculations. What I would have done to score maximum marks is that I would have told examiner that look, the IR would be restricted by the amount of the consideration with which the shares have been received, that is 85%, 25% gain would have been chargeable, and the gain would have qualified for BADR. However, the proportion of goodwill will not qualify for BADR. It will be taxed at 20%, and the BADR portion of the gain will be taxed at 10%. That's what I would have done to score maximum marks. So do remember, if you're short of time, this is what you have to do in the exam. And as far as the last part is concerned, that whether he should take the salary or not, that I have discussed already about what are the advantages of taking salary or and disadvantages. And I told you that if she take out the money from the loan account, that will not give rise to any tax. However, as far as the calculations are concerned, if she take out 15,000 salary, she will have to pay 40% tax and 2% NIC. So I can straight away multiply 1500 to 42% to tell her that what will be the tax she has to pay. However, out of that, she must be making some savings as well, because if the company pays her salary, the company will not only be able to deduct her salary as an expense from the corporation tax, but the employer's NI as well. Employer NI is 13.8%. So if I solve it here with you, that is 15,000. Total amount is 17,070, which the company will be able to deduct as an expense. And on that, company will be able to make 19% of the tax savings. That is 32
43. That is the amount of the savings that the company will be able to make. Now, all you have to do is you have to deduct this savings from the cost that E herself has to bear by taking the salary from the company, and that is 42% of 15,000. Because if she takes the salary from the company, she has to pay tax on 40,000 and NI on 2%. So guys, I hope that I have cleared all part of the question. If you have any questions, you can post in the question box. I'll try to answer them. Any question, guys? If I may ask, how many have you received an email from ACCA that remote sessions or remote invigilation exams will be available this attempt? Can you raise your hands? Okay, which means that it is possible that ACCA may schedule remote invigilation exams and you'll be appearing for the exam from your house. So do remember that practice hard, make sure that each and everything is compatible, your internet connection, your Windows or your computers. So these things does not hamper your progress in the exam. I wish you best of luck and I'll see you tomorrow. Till then, take care. Bye.